What is mass appraisal and economic cycle impact? Have you ever wondered how your property taxes are determined? One key factor is mass appraisal, a method that plays a vital role in property assessment and valuation. Let's break it down. Mass appraisal is the systematic process of valuing a large group of properties at a specific date. This is done using standardized procedures, common data, and statistical testing. Instead of looking at properties one by one, assessors analyze a whole group. They use traditional appraisal methods like cost, sales comparison, and income approaches to create a fair assessment for everyone. To achieve this, assessors relying on extensive data sets. They look at recent sales, property characteristics, and market trends. This information helps them develop valuation models that reflected the supply and demand for properties in specific areas, such as counties or school districts. The goal is to ensure that property assessments are uniform, consistent, and fair for tax purposes. Typically, these assessments are updated annually to reflected current market conditions, often as of January 1st. Now, let's talk about why mass appraisal is so important for property taxes. It ensures that the assessed values of properties accurately representing their true market values. This is essential for calculating property taxes fairly. Assessors use mass appraisal to maintain equity among taxpayers by applying the same valuation standards across similar properties in the same geographic areas. Most assessors manage their data and valuation models using computer-assisted mass appraisal systems. These systems store property characteristics, sales data, and geographic information, making the assessment process more accurate and efficient. The economic cycle also has a significant impact on mass appraisal and property tax assessments. Economic cycles consist of periods of growth and decline in the economy, which affect real estate market values. Changes in supply, demand, interest rates, employment, and income levels all play a role. During economic expansions, property values usually rise due to increased demand and higher incomes. This leads to higher assessed values and potentially more property tax revenue. On the flip side, during economic downturns, property values may drop as demand weakens. This can lower assessed values and reduce property tax revenue unless assessments are updated frequently. Because mass appraisal relies on current market data, economic fluctuations directly influence the valuation models used by assessors. Regular updates and statistical testing help ensure that assessments reflected these market changes. However, some areas may experience delays in adjusting assessed values to match economic cycles. This can create disparities between market values and assessed values, affecting tax equity and revenue stability. In summary, mass appraisal is a standardized approach to valuing many properties at once for property tax assessment. The economic cycle influences this process by affecting the market values that underpin assessed values. Regular updates in mass appraisal help maintain fair property taxation that aligns with current economic conditions.